What is the now? How do we come to know that there is a problem? How will we come to know that there is a problem?
Only when there is an issue faced or some difficulty.
Now, is there anyone, your friend, having any interest in coming and telling you that there is an issue, sir, please help me? Will anyone do in our lifetime? No.
Based on the productivity or output or any
We
defects,
have to observe. We have to observe. We have to look for the problems. We have to look for the observations. Yes or no? Right?
Yes, sir.
Because we are given the responsibility, look after the project or look after the organization or whatever be it. So it is our duty to always improve the performance. And always there is a chance for improvement because no job is perfectly done. We cannot do anything perfectly. That is God's will, right? Yeah. So we want to only improve the performance always. So always there is a chance for improvement. That is why we said that Lean and Six Sigma. Six Sigma is very nice, very small performance improvement from 99 to 99.5 like that. Whereas Lean is from 60 to 80% like that. Lean is that where we are only trying to compliance. Like I will give you an example. Like yesterday I told you, my son, I want my son to get into a medical college. Therefore, what I do is I provide a room, study room. I provide a computer with all the mock tests. Now, this is called total quality management. Now, instead, what I do is I give the mock test, ask him to take the mock test, and then give the result. And then again give a mock test. Wherever he has failed, those questions I take it as another mock test and then give it to him. Likewise, I do that so that the first one is called total quality management. The second one is called Six Sigma, because in the second one, I'm trying to reduce the defects. Whereas in the first one, I'm providing all the facilities, compliance to the rules. That is what I would like to tell you. That is what we discussed also. The madam was correctly telling that is the difference. Now, in the first phase, define phase, there are 3 steps. First step is identify the problem. And then, right, what are all the problems? And then select the best problem, right? Select the one which you are going to be comfortable with, which you are going to say that, yes, this is very important. For that, business policy is very important. What do you think will be a business policy? Can anyone tell me? What are all the business policies, possible business policies? If you are going to run a business, what is the policy you will follow? Customer satisfaction. Everyone will say, my policy is that my customer should be satisfied. Yes or no?
Yes, yes.
Yes, that's all. That is always you put. Whenever you have no idea, no, say customer satisfied. Customer will be satisfied by going ahead with this project. Yes or no?
Yes,
right?
Yes.
Now we want to only follow this particular market, rich people only, poor people only. Poor people may not have time to money and time to spend for this product or product. Likewise, you will say that business policy is only to attack this market. So we will have that market only. So you have keep that in mind, business policy, right? But rightly, what you said is the major one is a problem statement you have to make. The problem statement, the first 2 parts, step 1 and step 2, since Gopal Chokmar has said that we have not yet jumped into define phase, we are yet to teach you these 2 tools. That is, one is identify the project. Brainstorming is very important, right? And then we select the best one. Again, brainstorming, you can go ahead. Pareto chart, you can go ahead, right? All different tools are there. Fishbone diagram also you can go if you want sometimes, right? And then once you identify this is the problem and this is my solution, again with an expert, you have to make the problem statement. That is what you said. But problem statement is only one part of that. But we call that as a project charter. Step 3 is preparing the project charter. Now, when you want to make the project charter, ultimately, suppose I tell you one thing. Gopal Shivakumar gives you 90 rupees now in your hand. Today, he is giving you 90 rupees. Whereas RK is going to promise you that I will give you 100 rupees tomorrow. Which one you will select?
20 rupees.
20.
Yes, 90 rupees from Gopal Shivakumar, because it is number is same. Number, you are seeing the number. My number also is there. Number is not on your table. Only the numbers that are on your table is going to make you take a decision. Clear? So Cash is very important. Cash flow is very important. And that also we will have to speak about in your project charter. So with this small introduction, I will first of all take you what is a project charter in about 2 slides or 3 slides, and then show you, because you should know where this comes. Then I will tell you the financial terms involved in that, and hope you will follow. Even if you find it little too much for you, beyond, it will not be too much difficult. If it is a little difficult, then probably always my template is there. You just feed in what is known to you and you will get the result. Okay. With this, I am going to show you my slideshow. You can stop recording and then start recording, madam, for your reason. I'm going to share my screen also. Do you see my screen?
Yes, yes.
Yes, sir. Yes, sir.
Yes, sir.
One second, I've not opened my PowerPoint yet. I think I'll open my. Okay. Financial terms is there, financial studies there. Okay. Yes. Are you able to see this?
Yes, yes.
Project charter. What are all the components of project charter? I'll just briefly tell you, because this is going to be talked to you by directly in a case study by Dr. Vinod Shankar. And business case, problem statement, goal statement, scope statement, timeline, that is called schedule, and budget. This is where our session comes today. Understand? So you already know what is a business case, what is the business policy. If that is satisfied, you can make that statement. Then the problem statement you can make. What is the problem statement, we can tell you. And then goal statement, it should be specific, it should be smart, that's the thing. And then scope, what all comes into your scope, what all do not come into your scope, both you should specify. And then schedule, how you are going to go about, what is the monitoring method. And then budget, what is the amount that you are going to spend, what are all the resources you need, who are all responsible for it, and then what is the commitment you make, and by what period you will make the commitment. All these things will be there, right? Now, what is business case is justification to do the project for the effort that you are going to make and the investment that you are going to make. This will be there in the business policy. Problem statement, because no business will just spend like that 1 crore I want, means they will not give you. Business policy is no project should exceed a sum of 1 crore. That means if a project costs 1.2 crores, there's no point in giving that project report, right? So these are all the policy statements. Problem statement, problem that needs to be solved, impact of the problem. If you don't solve the problem, what will happen? Impact may or may not be significant to justify the business case. Goal statement, purpose should be there, outcome of the activity should be there, relevance to the project should be there, to the company policy should be there. Target, metric is very important, and then the time period by which you want to complete this project. Right. All these things should be there. There are only three more packs are there. We call it as a 6-pack project. I will tell you what are the other 3 packs also now. Scope statement, that is boundaries for the project. That is, other state should not come, other department should not come, or other person should not come. Other activities I am not bothered, other activities I will not interfere. And stakeholders' expectations and limitations. In what way I want their support, in what way I do not need their support. All these things, even though I make about 10-15 statements, it should come in 2 lines. That's all, 3 lines, 4 lines. Now, team members' limitations. That is, when they are available, when they will not be available for this. Timeline, schedule, starting and finishing of all the activities. The activities mostly we can act only this our 6 Sigma activities. Define, measure, analyze, improve, control. Handing over, right? And then budget statement. This is our session. This is what I'm going to talk to you. Expected cost and savings. And then net present value. Net present value should be positive. What do you mean by net present value? Today I must get the money from you, not that I must spend the money from my pocket, right? So now I'm giving you a question. I want to give you 10 rupees. You want to take the 10 rupees, or I want you to spend 20 rupees or nothing. Will you spend 20 rupees or take 10 rupees? The present value is either 10 rupees plus or minus 20 rupees. You will always select only plus 10 rupees because that is our aim. Only we can live. Yes or no? Clear? Net present value should always be positive. Positive means you are getting, somebody is giving you. Now, what is a project charter? I'll just give you an answer in a small slide. It is a request. It is a short document. It is also a short planning document, not a deep planning document, not detailed planning document. It's a small overall planning document. Project commences only upon approval from the project charter. Please note, this is very important. This question will come in your black belt question, right? And then why? Awareness to new members. That is, it gives the new members what is our aim and all. It intimates any changes in the plan or progress. Any hurdles that come across, then probably we can intimate them through the project charter. It is a goal orientation. Everybody who looks at the project charter, everybody who is involved in the project knows what is our goal, so that everyone concentrates towards the same goal and obtain approval. This is very important because nothing we should do without approval. Later on, if the project fails, nobody should blame you. Ramakrishnan, who gave you the approval to do this project? We have incurred 1 crore loss. I'll be sacked. No, I should show that this is the proposal, this is what is approved, and this is where I'm going by it. This is where the problem was. This is what the responsibility is. So I should save myself first. Everyone should be selfish first. We should protect ourselves, our team also, later on. Only if you protect yourselves, you can protect others. Yes or no? The team involvement is there. How this project charter is prepared? By team. That is why I said that you prepare as a team. I asked you to form a WhatsApp team mainly because that one of you may be knowing how to make the budget, how to make the financial statement. One may be knowing technical expertise, right? So one may know how to solve the problem, how to present it. One may be good in communication, right? All the answers are only the answers to verbs. Who, what, how, when, right? Living document it is called. This is also very important. Question may come in your black belt. What is this document? Is it a living document or dead document? It is a living document because it has to be updated. Whenever there is a hurdle, when there is a change, then it has to be incorporated. That is why we say that it is a living document. Pages should be limited. I will say 5, somebody will say 15. So whatever it is, it should be small. If it is more than 5 pages, nobody will look at it. 6-pack document. I've shown you all the 6 packs. With this small introduction to project charter, I will see what is revenue. Okay?
Sir.
Yes, sir.
Sir, the living document, right, sir? And
Yes.
every meeting it will be updated, right, sir?
If there is a, once again,
And
if there is a
review.
need, see, if there is a need, suppose you say that I want this particular equipment for testing, and that particular time period, that particular equipment is available, your progress is smooth. Suppose that day that the equipment is not given by that particular department, then this meeting is provided. In this meeting, you will ask the relevant boss, department head, that this equipment, please make it available so that we can proceed ahead with the project. So it will be made available. And there will be a delay. That delay should be noted to all. That is why we say that this document will be updated every time the meeting also will have to be scheduled in such a way that the progress is monitored and noted to everybody. Everybody knows that the progress is smooth. That gives a, what do you call, the influence, no? That is motivation, right? Yes, it is progress, it has progressed.
But
Right.
the MRM itself, we have the project charter itself, we have the MRM meeting, it's MRM schedule, right, sir?
What is project charter? MR.
Management review meeting. for every
management review meeting. You may call it as a management review meeting for this project charter, right? Okay.
So
Okay,
at that time
it
we will
is
review.
not a management review. Why should I have management come into picture here? This project charter, project progress is to be monitored by the project sponsor and the project members. That's all, right? Okay. Clear? And stakeholders, if required, you can call them. Okay, if there is a need for capital investment, suddenly, suppose I told you, no, the department is not willing to give the equipment because the equipment is busy for their work. Then what you should say, I must go and rent this equipment. So for the rental, say it is 10,000 rupees per month. Then you will have to get the approval for the capital. Yes or no?
Yes.
Yes or no?
Yes.
For that,
Yes.
you can, so depending upon the meeting requirement, you can call the people and get the meeting. But the project member should be there, project sponsor should be there in the meeting. Clear?
Okay.
And that is why we call it as a living document, because the living document will have to be updated as and when the progress is there and there is a change in the progress on the plan. Clear?
Okay.
Okay.
Okay. Okay.
Sir, I have a doubt. Can
Yes.
I raise it now?
Hello.
Yes, sir. When we discuss about the define, we talk about we would have to pick only one problem.
Yes.
So, is it if it is a multiple problem, how we can handle it?
Now, I am sorry, I made a mistake. There are 3 steps are there. The 3 steps I defined you. The first step is identify the projects. When I say identify the projects, there are many problems. Therefore, many projects. Understood?
Yeah.
And then second step is select the best problem. Yes or no?
Yes.
And then comes, once the problem is selected, we are now dealing with only that particular problem. Clear?
Okay.
Understood?
Understood.
The project charter is made for only one problem that you select as the best. Now, in case you are smart and then master black belt, you can take the second best also and then make another project charter. But these two should be 2 different project charters. Clear? Understand?
Yes, sir.
I'm going beyond the syllabus now, right? This is lifetime. This is a lifetime problem. In lifetime, probably when there is a husband and wife, always husband will say one thing, wife will say the opposite thing. Similarly, even in a department, there are 2 project sponsors are there. Then you will have one project for satisfying one project sponsor, another project for satisfying another project sponsor, right? That's always there. That is a lifetime problem. Nobody is going to teach you how to bribe for getting a project, right? I'm not going to teach you that also, right? And that is not ethical also, right? There are very many things we will not teach you. There are so many things we will teach you, but it is useful for your lifetime. Definitely. Clear? Understood? So we have got only one problem now on hand, and we are making the project charter only for that particular problem. Clear, sir?
Clear, sir.
Okay, thank you. Now, shall we go to the my what do you call that PPT use?
Yeah, please. Yeah.
Okay, thank you. Yes, in accounting, I don't know whether I'm using the right term. The person, financial persons can make the change in that financial accounting or whatever be it. Revenue is the income or increase in assets. Or increase in net assets that an entity has from its normal activities. So I hope you have understood, because this is just in English, but you will understand still better also. Suppose I'm buying a furniture, right? I'm getting a revenue, I'm buying a furniture, but that furniture in terms of money or in terms of the item, it is there with me. Therefore, this is all revenue, right? And commercial revenue may also be referred to as sales or turnover. I am selling a product, I'm selling a pen, you are giving me 10 rupees for the pen, that 10 rupees is the revenue. Clear? Understood? Whatever comes to you is a revenue, the form of money or anything. Now, some companies receive revenue from interest, royalties, or other fees. So I give you some money, you are paying interest, that is a revenue. I write a book and then you sell the book and then give me a royalty, that is a revenue, right? I fix a deposit, I put, I'm getting an interest, I'm getting the revenue. I'm selling a service, I'm getting a charge for that, that is a revenue. Is it okay, sir? Example, total revenue is equal to average price per unit sold into number of units sold. That is my revenue. Or total revenue is also average price per services given and number of services given. And then total revenue also can be said as total number of goods sold into average price per good sold. Anything that you like, all are okay, right? In all the industries, all are there. These three, if there is anything else which you gave, like I told you, interest and all, right? So total revenue is average price is 50, and then number of items sold is 10,000. Total is 1,50,000. Clear? Is it clear, sir?
Yes, sir.
Okay. So this is how you find out the revenue. Per service you give, the amount that you receive is the revenue. Market share is a percent of total sales in an industry generated by a particular company. Suppose you are running a company. Now, market share is calculated by taking the company's sales over the period and dividing it by the total sales of the industry over the same period. Now, I'm selling pen, stationaries or whatever you may call it. I'm selling about 1 lakh pen and I'm getting a revenue of 2 crores. But in this particular area, total pens sold were about, yes, ma? Yes? Okay. I am getting a revenue of 2 crores. Total revenues received by selling pens in the industry in this area is 20 crores. Then my market share is only 10%, 2 crore by 20 crore, right? I'll give you an example for that. A company sells tractors in the domestic market. Total sales by the company in the domestic market is rupees 100 crores. Total amount of tractors sold in India is rupees 500 crores. So what is my, this things? 100 by 50, how much? This is not correct. What is 100 by 50 is 20%, huh? It is 20%, right?
Yes,
So 20%. Yeah.
Yeah. So RK made a mistake. You found out the mistake. Thank you. 20% is a market share. This is how you find out the market share. Is it clear? Yes or no?
Yes, sir. Yeah.
Yes, sir.
The total revenue, you know how to calculate. I'm only giving the basic examples. Probably you can think it in a broader way in your applications and you will know what it is. And then you will have very beautiful ideas. This is revenue. This is not revenue and all. Right. Okay. Margin of safety. Margin of safety or safety margin refers to the difference between the actual sales and the break-even sales. That means you are actually getting only this much. Margin of safety is what is your money getting in your hand. Now, managers can utilize the margin of safety to know how much sales can decrease before the company or a project becomes profitable. I just want you to go through this and I want you to let me know, have you followed it or not? If you have not followed it, I'll give you with an example. Can you go through that and then tell me? Somebody can read also if required, because it is recorded, no? Otherwise, it will be silent on the record for some time. So, okay, I'll read it for you. Managers can utilize the margin of safety to know how much sales can decrease. How much sales can decrease before the company or the project becomes unprofitable. Understood or not? Tell me, huh? Not understood means it doesn't matter. I have also not understood so many times, no? After reading many things, only understood. Should we read it further on this?
Yes, sir.
Yes, we will read it. Okay. Now, I will tell you one thing. I am buying a pen. I am buying a pen for 10 rupees. Now, I want to sell this pen to you. Now, what is the value for which I should sell this pen to you so that I don't make any profit or I don't lose anything?
Same 10 rupees.
10 rupees, that's all. That is what is break even. Right? Clear? So if I buy 2 pens, then I should sell 2 pens at 10 rupees. Right? Or I can sell only 1 pen at 20 rupees. Then what is my break-even sales? 1 pen. Clear? Understood? See, I am buying 2 pens. 2 pens, how much I am paying? 20 rupees. I am selling 1 pen at what rupee? 20 rupees. So what is my break-even sale item? 1 item. Yes or no?
Yes.
I must sell minimum of 1 item. Suppose I buy 3 pens and I buy it for 10 rupees, 30 rupees. And then I sell the pen at 15 rupees. Then minimum 2 pens I should sell. Yes or no?
Correct. Yes.
So minimum sales I can reduce is only 1 pen. Okay, doesn't matter. If I'm not able to sell 1 pen, it is okay. No matter. I'm break-even even. If I'm selling 3 pens, I'm okay. Clear? Understood?
Understood.
This is what is margin of safety. This is how I'm going to quiz. I'm going to make it. And then I'll give you an answer also. Demand for your product is 1 lakh. Demand for your product is 1 lakh. Break-even production is 1 lakh. Now you know what is 1 lakh and break-even production means, you know. Right? Now I'm giving an option. Will you approve this production or will you not approve this production or will approve the production with some conditions?
Option C.
Demand for your product is 1 lakh. And if you produce, your break-even production is 1 lakh. Now, what will you do? You will produce or you will not produce?
B.
Production.
B.
One person says approve production, one person says do not approve production. Therefore, what RK will do is, I will approve the production with some conditions. No risk on my part. Anyway, it doesn't matter. We will give another problem. Demand for your product is 1 lakh and break-even production is 1.5 lakhs. Now, will you approve it or do not approve it?
No. Do not.
Do not approve.
Definitely, you will not approve it. Very good. Do not approve the production. That means you have learned what is margin, how to decide based on that. Now, third case, demand for your product is 1 lakh and break-even production is 0.5 lakhs.
Approve.
Approve production.
That's all. Therefore, in the first case, I'm just breaking even. But what is this, man? Why will I approve this project? Suppose I have no other product to sell. My manpower will be idle. My equipment will be idle. So in order to keep running, I can approve it. Yes or no?
Yeah.
That's all. If I am busy with other production, with other equipments, now will I approve it? I will not approve it. Right? Therefore, whatever decisions I give you, please note, you are the master of your decision. Whatever decisions you take will always be the right decision because you know the pros and cons, you know the facts in hand. That is why we say that decision taken based on facts-based decision, evidence-based decision is always the best, and you are the best judge for that because you know the resources in hand, you know the problems at hand, you know how to solve it. Clear?
Yeah.
Did you get the confidence?
Yes.
Thank you very much. I think that is what I want to impart upon, the confidence in making decisions. Now I'm going to give you example for margin. Sales is 100, expenses 70,000, profit is 30,000. So margin is 30%. Simple. Clear?
Yeah.
Now, what I have done is, I have also given a template and then I will show the template again. I will say same thing, simple. You know how to do it. Subtract and get the ratio. Return on investment. Return on investment. Now, I think I will go to that, show it and then come back to investment because I will stop sharing. I will have to end show. Now what I will do is I will go there and then, yeah. See, this is what I have given. This template is given to you. All you need to do is sales, direct cost and indirect cost. I will just make it to 2,000. You can see here profit margin will change 65%. I will make direct expenses to 1,000 rupees and then this will change to 40%. I will make indirect expenses to 50 rupees, then it will increase 48%. So you can play around in this template and then learn how you could calculate profit margin. Okay? Yeah?
Yes,
Yes?
sir.
So this template I have given it to you. I will not save it. I have given it to you. Now what I will do is I will go to the slideshow and then from current slide I will go. Return on investment. Please note, I am giving you 1,000 rupees. And at the end of the year, you give me 100 rupees. So You have given me a 10% rate interest. That is what is return on income. Return on investment is 10%. Is it clear? Is it clear? That's all. So it's the percentage at which you are getting, or 100 rupees, how much you are getting per year. That is the return on investment. And then net present value. Net present value is important. I told you already. I've given you an example also, 90 rupees and 100 rupees from Gopal Chowkumar and my 100 rupees. So you can see this. Value of all future cash flows, positive and negative, over the entire life of an investment discounted to the present value. That means my present value of the project should be positive. Is it clear? Understand? Okay. Even if you are not clear,
So can you share an example of it?
Yeah, I will make it clear in your the future, the present value of all the cash flows, right? We'll see that. Net PV is used for determining the value of an investment for a project to decide its worthiness, whether the project is okay or not okay. Somebody was telling, no, sir, if I'm having multiple projects, when I told you, I said, I apologize, and then said that there are 3 steps, first step, second step, and third step. Now, in the second step itself, you can do this, and then if there are 2 projects, select the best by going for this NPV value. Now, net present value is Z1 by 1 plus R plus Z2 divided by 1 plus R whole square plus Z3 by 1 plus R whole cube minus X0. This X0 is at this time, 0th time. This 1 means 1 plus R to the power of 1 means at the end of 1 year, at the end of 2 years, at the end of 3rd year. Clear? So at present it is going. First year I am getting 100 rupees. Then 100 by 1 plus R. That means my getting 100 rupees after 1 year is equal to my getting 90 rupees now. Yes or no? Clear? Understand? See, I am giving you 100 rupees today. I am giving you 100 rupees after 1 year. Now today in 100 rupees, you can buy 2 pens. And after 1 year with 100 rupees, you can buy only 1 pen and 1 pencil. The value has decreased. Yes or no?
Yes, sir.
Yes.
Means that today I can get with that 100, 200 rupees or whatever, 100 rupees, only 1 pen and pencil, not 2 pens. If I am having the money right now, I can get 2 pens. If I am having this money after only 1 year, the value of that money is only some 150 rupees. I can't buy 2 pens. Therefore, please mute yourself, yeah? If you are disturbing, mute yourself. When you want to speak, you can unmute and speak. Okay. Now, so this cash flows, the present value of the cash flow will be less. The present value of the cash flow will be less. Right? Now I'll tell you, I am spending.
Excuse me, sir. Mr. Umashankar, kindly put it on mute. We are getting echo.
Hamsapriya, please put that particular participant.
Yes, sir. Yes, sir.
Thank you. That is our job, right? Okay. Thank you, ma. Sorry, participant. I am sending 1,000 rupees now. I am giving 1,000 rupees now. So minus value, minus 1,000 rupees it is. Now, I am getting 1,000 rupees in the first year. But the value is only 800 rupees at present. Now, what is my net present value? Minus 200. Yes or no? Clear? I am giving 1,000 rupees now. After 1 year, I am getting only 800 rupees back. Is it worth or not? It is not worth.
No, not worth.
Yeah, because even if I get 1,000 rupees, it is not worth, because 1,000 rupees after 1 year is equal to only 800 rupees now. Yeah.
Yes, sir.
Therefore, that is what this first term, second term, third term, all put together, the net present value, I must get some money back. Positive it should be. That is what it means. I'll give you more example. Z1 is the cash flow in time 1, time 2, time 3, that is year. And then initial investment time 0. So R is the discount rate or interest rate or opportunity cost in percentage. Right? What is the cost? That is Suppose I give this 1,000 rupees instead of spending in this project, I put it in a bank. I get 10% interest rate. Then I will be getting after 1 year how much? 1,100. Yes or no?
Yeah.
Now, if my first year cash flow is 1,100, then it is break even. If it is 1,200, I'm getting a profit of 100 rupees. Likewise, that is how the situation goes. Now, there are two projects. Example, we are going to see. There are two projects under consideration. Project A requires an investment of 2,500 now. It is expected to generate year-end cash flows of 900, 800, 700, 600, and 500. And then project is scrapped. No more revenue. In years 1 to 5. The interest rate of the capital, if I put it in the bank, I will get 10% rate. Now, net present value is 900 first year, putting all these values minus 2,500 going at present. Therefore, it is 225.53. That means that by going through this project, I'm getting a value, I'm getting a cash of 225 rupees as of now value. Fine. Project B requires an investment of 2,500, same amount, but it is expected to generate year cash flows of 500, 600, 700, 600, and 500 in years 1 to 5. The interest rate of the capital is same. Now, if I see this net present value, it comes to minus 303.39. Now, tell me which project I will go, project A or project B?
First one.
First one, because I am losing 303 rupees as of present value. Whereas I am getting present value, a positive value, 225 on hand. It is going from my hand, it is coming to my hand. Therefore, I'll go for this project. Now, what I will do is, project A is better. This is the way it is calculated. I am giving you a template. All you can do is you can play with this discount rate. You can change this value, 5%, 8%, 6%, any value you want to put. Whoever gives you a more interest rate, that value you can put. Because if it is not satisfied, then you can give that money to him. Some bank is giving you 15%. If this is not worth, give that money to that bank. He will give you more money. And you will also save your effort, your time, everything. And cash flow project A, all you need to do is put the money here, 2,500, put minus 2,500. All these things will be calculated on its own. All these values you'll have to put cash flows. Here also you'll have to put cash flows. And then it will decide, and then it will also give you which is better. Project A is better or project B is better. Can we go to this template? I will share this template now. I've already shared. All I need to do is I want you to play and learn. Please note. Oh God, I will have to close this. And so, yes. Do you see this here? The template? Are you seeing?
Yes, sir.
Right. See, this is ROI calculation. All you put is you put some money. So 1 lakh I put, 100,000, I'm putting it. And then money gained from that cannot be 1 lakh. So 10,000 I'll put 5,000. It will become 5%. That's all. So you put here the investment, you put the money that you will gain after 1 year. Then that return on investment is calculated here. So this one you can play with. And then here, the discount rate, you can put interest rate 5%. Tell me what percentage I can put, 10% or 5% or any other percentage?
10%.
10%. I'll put 10%. Very good. Now, what I will do is, what is your initial investment?
1 lakh.
1 lakh. I'll put 1 lakh. So I'll have to put minus sign. Therefore, I'll put minus 1 lakh. 100,000. I'll put an enter. Automatically it will change. Now, what is the first year cash flow? Now, there is one more participant. Select another participant. Please tell me your project. What is the cash flow now? What is the amount you want to spend now for this project?
Sir, one doubt, sir.
Yes.
Sir, if I suppose I want to invest in some selection of some technology investment project.
Yes.
So
how much you want to spend? Tell me how much you want to spend.
Suppose I want to invest in 2 lakhs project.
How much you want to spend? 2 lakhs. Clear?
Yeah.
2 lakhs. You put minus 2 lakhs. That's all. Wait. You tell me one by one. You give me a problem one by one. 2 lakhs you have given. That's all. You have selected the technical project. You have put the 2 lakhs. Then what is the first year income will come? Tell me. What is the first year? After 1 year, what will the amount you will get?
No,
You will
it
not get any
will,
amount?
for
You will
the
get
first, for the
amount or
first
you will not
2
get
years,
any
I
amount?
do, for the first 2 years, I don't get any
Put
output.
zero, that's all. Put zero. Put zero. That's all.
Later on,
Then
I
what
will
are
get,
the third year also you will not get?
no, later I will get 50,000, 10,000, 50,000 like that. I will get
How
the
much you
revenue
will
of
get? How much you will get?
20.
Third year, how much you will get? 20,000.
Yeah.
Right. Now,
Yeah.
fourth year, how much you will get?
50.
50,000.
Yeah.
Fifth year, how much you will get?
1 lakh.
1 lakh.
Yeah.
Okay. 100,000. Correct. Now, I will not give you the project for two things. Please note, these are all we are all black belts and green belts. We are going to get the project recovered within 2 years, 3 years, not even 2 years. Please, right? Okay. Understood? It's a long-term project. We are not going in for this project charter at all.
2.5 years is the best ROI, I think. 2.5 years.
2 years. That's the thing.
Yeah.
That's what you should do. They can wait for only 2 years, not more than that. Otherwise, it is a long-term project that is taken up separately. That is taken up separately, not for this. For Six Sigma project, please note, they are finding out the defects and improve the project process, product, and get the thing immediately, revenue. We have to correct the things immediately, right? Somebody was saying that we want instant results. This is what the instant results we can get, the best. Clear? Understood? Now, we are dealing with not investment projects for technology incubation and new technology and all. The present problem is that this is a problem. This is what I want to correct it. And I will correct it within 2 years. Within 1 year is best. Understood? Clear? Okay, sir?
Okay.
Okay.
Right. Now, the first person who has given me 1 lakh, what is the first year income I will get?
10,000.
10,000. Second year?
30,000.
80,000.
30. 30.
30. 30,000. Right. Somebody, yeah. For third year?
40.
40,000. Then fourth year?
50.
50. Then fifth year?
60.
60. That is what your mentality. So you are getting a cash flow of 35,000 rupees. Will I spend 1 lakh now and then get 35,000 rupees? Or will I get 2 lakhs and then lose 88,000 after 5 years? And now at present. Right?
Okay.
Which is better? Project A is recommended. Clear?
Yeah.
This is how you can play around, change any interest. Suppose I put 8% interest. Then what we'll see here? Then I'm getting only 45%, 45,000. I'm getting 79,000 here. Right? For the same 1 lakh rupees, now suppose I'm getting 45,000 here. Say 50,000 I'll put 50,000. Then 50% I'm getting 1 lakh. 50% I'm getting, whereas the return on investment here I'm getting 44,000 rupees. So or that I will go for this only. I'll go for this only. Right? At 8%. Right? If I put 50%, then I'm losing money here. So I will go for this 50% in this case. If the bank is giving this much, I'll go for this. Otherwise, I'll go for this. Yeah. Understood?
Okay.
So return on investment is separate, and that interest rate you can put here, and then you can find out. If it is 10% interest rate, then you can see this. This is the thing. Clear? Because I'm getting the present value at this interest rate, and then seeing whether this project is giving me more than this or not. That's the thing. I think I'll go to this slideshow from the current slide. Understood? Now, I will go for this example now here. Finance company is there. Recruitment of 2 new programmers. I want to recruit new programmers for this. Time period for analysis is 1 year. As I told you, we are going to deal with only for short time period for this Six Sigma projects. Expected revenue increase is 50% if I have these 2 programmers, I can get a revenue of extra 50%. I will see what is the cost involved. Salary I have to pay for 1 year, 75,000 for these 2 new programmers. Recruitment charges rupees 3,000. Training charges 4,000. Area I have to put rent then 2,000 rupees. Computers and softwares I have to put about say 5,000, which is too small, but for example I'm putting it. Total cost is 89,000. Right. So benefit, additional revenue, I'll get 1 lakh. Customer satisfaction increases, and that value I'm just converting it to say rupees 10,000. Total benefit is 1,10,000 rupees. Now, cost to benefit ratio is 89,000 by 1,10,000, 0.81. Therefore, I am spending less cost for getting 1 rupee, less than 1 rupee for getting 1 rupee. Therefore, this is preferable. I will recruit the new programmers. Decision, hire the additional programmers would be beneficial. Understood? This is cost benefit analysis. Is it clear?
Yes, sir.
Now, hard cost and soft cost. Please note, whatever I tell you is only my opinions, RK's opinions, not any other opinion. Right? There may be a difference, but as I told you, in real life, it will be different from people to people or industry to industry. But generally, whatever I say, you will hold on. Why I'm saying this, if you take my word and then go to the real life and then speak, when there is an objection, it is purely your prerogative to accept or not accept. I would say that not accept, because from his point of view, he may be correct, right? So hard cost. Hard cost is the cost directly related to the production and the development. Clear? Understood? I'm spending for that. Directly required for that. That is the hard cost. Soft cost is indirect cost and is not directly related to the physical production or the construction of the project. It is an indirect cost, is soft cost. Okay, is it clear? Direct cost, indirect cost. Now, it is easy to estimate because whatever you are going to spend, sir, I'm going to buy a cement. So I'm going to pay in the labor. I'm going to pay for the rent, today's rent.
Raw materials?
Yes. Huh?
Raw material?
Yes, that's all. Raw materials, hard cost. Very good. Right. Now, it is not easy to quantify, not easy to estimate and forecast, as it may continue even after completion of the project. You can incur even before the project, you can incur even after the project. Right? In most of the cases, you will not have any discrepancies. The discrepancy point, I will come only to the last end. Therefore, don't worry. Right? I will tell you the discrepancy only. It is tangible. That is, you can see what is set for to acquire assets, to other resources required. So hard cost is definitely that can be tangible. And then intangible can be incurred on behalf of the client or otherwise. And intangible means what which you cannot probably see it and things like that. Now, not incurred when the project is completed or even before the project has been initiated. Hard cost, you do not incur it before or after the project. Whereas soft cost, you incur before and even after completion sometimes. Right? The legal cost, setup cost, or few generally incurred even before the project is initiated and started. Now, incurred only during the project stage. Only during the project you are incurring the hard cost. Now, after the project is completed, whatever you incur is only soft cost. Now, I will tell you, hard costs are directly related with the construction of the building or incurred for its development, or in any other cases, accordingly, you can reword it. Soft costs are not related directly. That is, they are indirectly related with the construction of the building, indirectly related, like design charges, nothing to do with the construction. That is soft cost, right? Now, soft cost, design, study, permit, you pay for permit, you pay for license, you pay bribe, you pay loans, you pay taxes, advertisement, insurance, these are all soft costs. Clear?
Clear.
Now, the failure costs that refer to those direct and indirect costs that result from an organization failure to ensure work health and safety. That means somebody gets into an accident and then I incur on that. That is again a soft cost. Clear? Understood?
Yes.
Understood? It is an indirect cost.
Yes.
I should have taken care for the worker, right? Now, suppose I take care for the worker and pay an insurance amount, then will it amount a soft cost or hard cost?
Soft cost.
Hard cost.
One says soft cost, one says hard cost. Am I right? Both are correct because your perception is I'm spending for this worker during the project and this is so that he will do his work better. It's an overhead cost, therefore hard cost. Or you would say that it is not directly related to the work. It is directed only indirectly related. For his safety, I'm paying. For the work, I'm paying separately. Therefore, it is soft cost. So whatever argument you say, it is accepted by RK. and then see what the industry accepts and then go as per that, right? Labor, overhead, see, this is what this means. This is where the confusion comes to me for that. Overhead, and then material, fixtures, appliance, equipment, these are all hard cost. But when it comes to this investment in health insurance for workers, that is hard cost, some people say. I don't know where I recorded it. I recorded it from some literature. Either the literature may be bogus or he may be correct in this argument one of you have put in. But generally, insurance costs are soft costs, indirectly related. Okay, this is where I wanted to tell you my my discrepancy. Otherwise, you can go ahead. Direct cost, indirect cost. If it is directly for the project, during the project, it is hard cost. It is before and after the project, not directly connected. It is soft cost. Is it okay? Clear?
Okay, sir.
Okay. Whatever you decide, it depends. I put it depends. Thank you very much. No, it is schedule, Gantt chart. It shows the planned start and complete time for all the activities involved in the project. It must consider the resources required and the interdependent. This is nothing to do with financial, but still I will complete it now if time permits. The schedule for DMAC Six Sigma project will show the times for the completion of the 5 phases. Right? It helps in monitoring the project progress and determine when we'll actually complete, what is the hurdles. Let us make a simple Gantt chart in Excel. I think a typical Gantt chart in Excel is like this. So this is how. I will also explain to you how it is to be made in Excel. Can we see that?
Yes, sir.
Okay. Now let us make a simple Gantt chart in Excel. I'll let stop sharing, and then probably I will start sharing again. Oh God. You see this here? Clear? This template I'm going to do. The first sheet you can run around, but if you get into a problem, skip it. Don't play around safely. If you are good in Excel, play around, otherwise don't play around. The second simple chart I have given you, one. And the third one I'm going to show you. This is only 2 colors are there, start and duration are there. And the third one I'm going to explain to you how to make it, right? So what I will do is, I'll just select this, Control C, and take a new sheet. And then I'll copy and paste it here. This is the data here. You see the data?
Yes, sir.
Right? This is the data here. Or what I will do is probably. Oh. What I have done is, I have given the start date for the different tasks, different activities, right? And then I have given the starting time, days, and duration, and then when it is going to be finished. This is what I have drawn here. All I need to do is, please follow me very carefully. I'm going to give you this sheet, and you can play in this here. See here, what I'm going to do is, I'll change this here. Starting date, suppose I want to make it, say 10th day only, I want to start creating this. See here, there is no, what is that color? Blue color, huh?
Yes, sir.
This color is not there here. You will get this blue color for 10 days. It is starting with 0, no? I'll make it as 10. See, you can see this blue color for 10 days. Clear? Yes or no?
Yes, yes, sir.
Right. Suppose I'll make it as only this is 200 days.
Well,
I'll put it as only 100. Right? See, it has changed here. Right? Control. So that you can change here. I'll make it a 0 here. You can. So it has gone from this analyzed state. It has gone there. So what I will do is I'll go back. So this is how you are going to schedule it. And any day, this is the day. And day you can draw a vertical line. And then where you should be, you know, where you are, you can find out. And then say whether you are going. Now, how to do this? Say this is the table. First you select the table. Clear?
Okay. Yeah, understood.
Then you go for insert. See my mouse click. Insert is there. And then recommended charts will be there. I click the recommended chart. I'm getting this. See here, I'm selecting the second chart. I'm not selecting this. If I select this, I will get this. If I select this, it will be one after the other. So I will select this and then click OK. That's all. All I need to do is I'll have to go there, click it, and then I'll make this project chart. A, right? And then I'll click it here, go to the home, and then change the size, change the color, everything. Change this color, and then project A. And then I'll select this here, all these selected, then I'll go there here, fill color, I'll go there and change the color to any value I want. I'll put a dark blue here, right? And then I'll select this color, and then I'll go there, fill, and then I'll select a yellow color there, probably brown color or whatever. I'll put this color. Yes, see it has changed the color. And then this I'll select, I'll just change the color to, I'll go to the fill color, and then I'll change the color to whatever you want, this color, right? So this is how you want. And if you want to increase the size, you can increase the size. You can increase the size. And then if you want to select this column, oh God, select that, and then I'll increase the font size, right? And then now you can change it here. Suppose I'm going to make it as 20. See here, the just to 20, 20, 40, 60. So 20, 20, 40, 80, up to 80 it has come here. So this is how you use this Gantt chart and then play with this. First page is always for you. I think that completes my portion of